is right. Greed works.
Welcome everyone to episode 11 of Let's Play Wall Street Raider. I'm RakeM, and today we've got a lot to get to. But before we talk about that, let's recap what happened last episode. We had a major spike in the price of crude as a result of a Hubbard's Pete's scenario, and that resulted in record profits in Royal Dutch, Nippon, and us personally. So we have a ton of cash that we need to invest. We sold off, took our profit out of Royal Dutch and reinvested in integrated oil using Luke Oil. We boosted him up to where he's a market leader now. And we haven't done anything with Nippon. Our target price on him is roughly $2,500 or so. And we will deal with him shortly. But this episode, I have done an insane amount of market research inside the game to try to figure out what we're going to do with this money, with the money that the bank has as a result of everyone's cash. And this episode we're going to be doing a lot of buying and a lot of fast forwarding during that buying. If I were to sit here and just go through the game one by one and buy them, it would probably take about 3 to 4 hours. And I don't want to put you through that. I want to get all the purchases of all the stocks done all at once. And by the end of this episode, we currently have a stake in 20% of the market. And by the end of this episode, we're going to have a stake in 80% of the market. And I'll explain what I mean by that shortly. But the main thing is that the first 20 minutes or so of this episode is going to be me showing you my market research and investment plan for what to do with all this money. And then we're going to proceed to go ahead and make all the purchases. And we're going to be doing a lot of fast forwarding in between, just so you don't have to sit and watch me buy stocks for 3 hours. Alright, so before we get into that portion of it, I noticed that corn has dropped below $3 a share, so I want to short it. And I also want to, I want to buy it. And then I want to try to short crude again now that it's dropped to 180. Now the game was preventing us from selling oil short last episode, and I'm not sure that it's going to do it now, but we definitely want to short it as soon as it will let us. So let's start with corn. Trade. And we're going to buy. So that's the maximum. Alright, now let's see if it'll let us do oil. No, still limited to 10 contracts. Alright. So it's been about 3 weeks for me since I recorded episode 10. I went on a trip to go play a poker tournament, and when I came back I had a book that I had to finish, which should be published next week. And so then I took about a week and I put together my market research to figure out what I'm going to do with all of our trillions of dollars. So what I did was I created this spreadsheet of all of the industries in the game, and these are the two in green that we own. Alright, so here's all the industries, and I put the non-asset holding companies down here. I'm talking about business assets, banks, exchange-traded funds, holding companies, and insurance companies don't have it. Working assets. So I put them down below, and here they all are. And then I went to every industry and I put in the companies that were in each industry. Then I went to the largest market share company, the company with the largest market share in each industry, and I looked up their financial balance sheet, and I plugged in what their business assets were. Okay, so the top one on each one of these, I plugged that number in. Then I went to the industry projection, and I put in what their market share was projected to be 1 year from now. Okay, irrespective of their growth rate. Then I went to the buy-sell screen for business loans, and I plugged in what their business loan amount was. All right, then the rest of these are calculated fields. So the idea was to figure out what the business assets on these others. I simply divide this company's, like for instance in the advertising, TMP World, I take their business assets, divide it by their market share, and then multiply it by the market share for Publicis, and that becomes a value for their business assets. Now obviously this is a little bit skewed in that TMP World's assets, this is what their assets are today, and this is the projected market share for a year from now. So this is what their assets are projected to be a year from now. You know, it's not exactly perfect. So after I got done with this calculation, I went and checked several of them, and the margin of error is about 3%. Okay, so that's close enough. I decided that was fine. It was going to take 30, 40 hours to look up each company. I mean, there's over 1,000 of them, so 3% difference. I just called it good and got it done in a few hours. All right, so the reason why I did that was because I wanted to know what the largest industries in the game were. All right, so that's how I went ahead and put in, this is the percentage of game total game assets. All right, so when you add this up down the bottom, there's a total of 13.7 trillion in business assets in the game. And there's a total bank loans of 6 trillion. All right, and we currently at our bank have a business loan portfolio of 1 trillion. So the outstanding loans is 5 trillion. All right, so that's where I started. So I took that and I sorted it by the total game assets. So we currently have a stake in Integrated Oil and Global Telecommunications. And when we start doing our investing, I'm going to start at the top and I'm going to work my way down. Okay. Now I don't know how far down exactly I'm going to get on this list, because we're going to run out of money at some point. But 80% of the game's business assets are in the top 30 industries. So I'm hoping that we can get all the way down to 29 or 30 on this list. And that'll give us, a major portion of the entire market. All right, so now analyzing, further analysis that I've done, I went ahead and plugged in off of the Industrial Growth Rates report what the growth rate was for each industry and the average pre-tax return. And the reason for that is, on these ones that are, well, I guess let me explain what the color coding is. The ones that are green, they're growing at a positive rate, and they have double-digit pre-tax return. The ones that are gray are growing at a positive rate, but they have 10% or less as a pre-tax return average. Okay. Yellow, they're growing at a negative, but their average pre-tax return is positive. And red, they're growing at a negative, and the average return is negative. Now, as you know, as a player of the game, whether your stock price goes up or not is not really based on these numbers. It is based on what your management is, what your company itself is earning. And, that's determined by whether or not your earnings are going up or going down. So if we earned, negative 30% last year and we earned negative 10% this year, even though it's negative, our net value may go down, but our stock price could go up. All right, so these are not a good indication of, not a straight up indication of whether or not you can make money off of a stock in an industry. But it gives us a starting point. So like for instance, in these that are green, we don't have to worry about how big a market share we capture, because we're going to make money no matter how big of a share we get. The yellow and the red though, we got to have a major market share because we want to reform those industries, not just those companies that we buy. So we would need at least a 25% market share. 30% would be even better because we're probably going to have to grow at a negative at first. All right, so that's just an indication of what kind of market share I'm going to need for each one. I'll be referring to that. And these numbers over to the right, this was just me trying to figure out, how far down the list I could get before I would run out of money. All right, so based on these numbers, I put together this plan. All right, so and for the purposes of this video, I grouped it into 5 industries because we're going to do a lot of fast forwarding. By the end of this episode, I want to be all done with buying all the stocks. So after I get done explaining my plan, if you want to just skip to episode 12 and see what the end result was, you can do that. So what we're going to do is we're going to start with retail discounters. And we're going to have the bank buy all of the loans for all 5 of these industries. That's step 1. Step 2 is to go into each one of these individually and buy up stocks. Okay? Now, I'm assuming that I can get 25% of each one of these industries, but I don't know yet what that's going to cost. Okay? This is 25% of the assets is just kind of my average. I'm just using that as a guide point. It could be more, it could be less. Just depends on what stocks are available. I started to go through, I went and plugged in on this other spreadsheet. I started with, here's retail, where's retail? I guess this isn't sorted by largest to smallest, so let's go down to retail. What, did I hide it? Alright, anyway, let's say defense and aerospace then. So I went to their projections report and I put in what their stock price to net worth was on each one of these, just to kind of give myself some kind of an idea what companies I would be able to buy. Alright? But I soon realized that as time rolls on in the game, these numbers are going to change. So all of these snapshots that I took and all this decision making that I tried to do ahead of time, it's not going to hold because these numbers fluctuate all the time. Okay, and with the trade war ending, at least we hope that it's ending, a lot of these numbers are going to go up because the GDP growth is going to climb. All right, so instead, what we're going to do is we're going to just have the bank buy all of these, and then one by one, we're going to buy stake in these industries, and we're just going to repeat that process 5 industries at a time until we run out of money. All right, so that's the plan. So over here, I've got all of my companies with loans that I plan to buy. And you'll notice that some of them, the loan number is blank. That's because right now, they don't have a loan. But by the time we get to them, they might. So I'm going to leave them on the list, and if they aren't on the list, that's fine. I'll just go to the next one. And I've sorted these groups of 5 industries by the company name so that I can just go down one by one. So there's the end of group 1, and then group 2 starts here, etc. All right, so when we get done, we're going to have, hopefully, 29, maybe 30 stocks in our portfolio. Well, you may be thinking, well, you know, you can only own 15, so what are you going to, how are you going to address that? Okay, so here's the ownership structure. All right, so here's me. I own the bank and I own Lukoil. Those are my two slots that I'm currently using. And the bank owns Nippon. That's its first stock. All right, it doesn't own any others. So those are the ones in green. Those are what we already own. In pink, this is what we're going to acquire. Okay, so I'm going to put the companies that I buy out under the U.S. utilities. I'm going to put that under the bank. And then when we buy all of these loans, a lot of these companies are going broke. And so when it takes ownership through bankruptcy, those will show up under here. Okay, and a lot of them are in the industries that we're targeting. So when that happens, we will either, you know, move the stock to merge it with another one of these, or we'll buy the assets, or we'll sell it if it's in an industry that we don't care about. You know, whatever the case may be, we'll address that as it happens. All right, so here's retail discounters. Okay, so I'm going to own the first, 9? First 9 I'm going to, or excuse me, 8. The first 8 I'm going to put under my name. And those will be companies that I will buy and sell for my own capital. Then I'm going to buy 2 insurance companies, and I'm going to put 9 stocks into each one of them. Okay? That's the plan. All right, so I'll have a total of 12 different stocks by the end of this episode. And I'll have 3 slots to work with for the future. All right, so that's the plan. And I'm going to start working it now. I have changed the stock ticker to 1, and the stock ticker is paused. All right, so I'm going to go now, and I'm going to take the bank and have it buy all of these loans. Let's go loans to buy. All right, so I'm going to fast forward through that and come back when it's time to start buying stocks. So we bought $1 trillion worth of loans, and if I go to the list bank loans, here they all are. All right, and apparently some of these were frozen at their previous banks. Well, not that one, but like Intuit and VA Linux. Dayton Hudson. Some of these were already frozen before we bought them. Not too many, just a few. But in any case, we'll deal with that stuff later. So now we want to go through and do some buying of stocks. So let's go to the plan. So starting with retail discounters. All right, so what stocks are we going to buy? Well, Costco is one, and these I would love to have, but they're already owned by someone. He's too expensive, and this one and probably this one will end up inheriting through the bank. So it looks like Costco is the only one. Alright, so I'm going to fast forward through the purchase of him and adjusting his management, which looks like we're going to make it 0 on the dividend, 1%. Well, we'll leave that at -1 and we'll increase this to 5. So 0, -1, and 5. Alright, so I'm going to fast forward through that real quick. Alright, he has 29 billion in debt, and we want to get this down to 3-1. So I'd like to contribute some cash here so that he can pay his debt down a little bit, not a lot, by about 4 billion. Let's see, we want this to be 25, so I guess about 8 billion. Alright, and he has no cash, so we just need to give him 8 billion and have him pay down his loan. His management is currently incompetent, but we're going to worry about turning that around after we get done buying. I want to buy as many stocks as possible before the trade war ends and this GDP growth skyrockets. So we're going to move on to the next industry, which is internet service. Actually, I can just pick it off of here. Probably be faster. Alright. So Baidu's going broke. We own his loan, so we'll pick up whatever's left to him after he declares bankruptcy. So here we've got Yahoo, AOL, and BarnesandNoble.com. So what percentage is that? That's 3.6, 5.8, 5.9. So he's in the green. So 5.9 is fine, and then we'll pick up whatever Baidu has left. That should put us in the teens. So let's go with that. Okay, so Yahoo, AOL, and BarnesandNoble.com. I'm going to buy them all, merge them, and then let's see, the growth rate on this one is 9%, but we're probably going to need to reform our management first. So I'm going to set growth rate to 1%. I'm going to make R&D, he's spending 8, but he's the one going bankrupt. Well, here's an 8. So we'll make R&D 9, we'll make our growth rate 1% and no dividend. Alright, so we've bought AOL, we merged it with Yahoo, and I sold off its 15% stake in Alibaba because Alibaba is currently trading at its high point. I used the money from that to pay off some of the loan, or actually all of the loan, but I left the bonds the way they are because that gives us pretty much a 3-to-1 ratio. We're gonna have to pay $3,000 of this extra money in taxes, and we got what percentage was it? Almost 6%. So that's going to be good enough. We'll get Baidu, and I'm not actually sure if there'll be anything left after Baidu declares bankruptcy, because see how much he's negative in cash, 157 billion, and he's only got 50 billion in assets. So this may be a complete loss for the bank, and it may not get any stock. But if these assets get sold off, I don't know that we're going to get the opportunity to buy any of them or own any of them, but if they just disappear, if they're liquidated, if they don't come to any of these companies, then these rates should go up, because the total stock capital or asset capitalization for this industry will take a huge dip, which will drive up the earnings. But in any case, we'll worry about that when it happens. Baidu declares on May 30th. We're still at the beginning of May, so it'll be a little while with the stock ticker low. Alright, so next up is software. And looks like Microsoft's going broke, and that's a 40% share. So Computer Associates may be the only one. Let's see. Not sure what company that is. So let's take a look at Microsoft and see how much of him we're going to get. See, he's major negative too, but he's got more assets than he owes. So, I mean, he only has to come down to where this is 1-to-1 ratio, so he'll probably end up with like $50,000 worth of assets, or 50 billion. Alright, let's look at who we want to buy. So Computer Associates, I guess, is it, and he's at a negative right now. Let's take a look at him. Alright, so all we got to do is we got to buy him and give him, let's see, need to give him 3 billion, 4 billion. $4 billion we'll give him. Alright, let's buy him. Fast forwarding now. Okay, that's all we're going to do for software, because we're going to inherit Microsoft, and I don't want to have more than a 50% share. So if I buy this one, which is the other one that I was targeting, SAP, then we'll be up close to 50% of the market, and I don't want to put us all the way up that high. So that's all I'm going to do for this one. All right, so next on the list, defense. Alright, so here's Lytton, British Aerospace, General Dynamics. That's 8.4, 15.7, 22.5, 24.5, 26.4. Alright, so I'm going to proceed with those. I'm going to eliminate the dividend growth rate -2 for right now. And looks like we're going to be setting the R&D to 11. Alright, so I'm going to proceed with those purchases. Alright, Lytton now has loans of 76 billion, and we want to take it down to about 50. So make that 40, 52, whatever, 48. So we're going to contribute, let's see, 76 minus 48 would be 28, right? So 28 billion. Okay, oh, that's 2 to 1. So I guess we need to do it a little bit more, and another 25 billion. All right. Wait a second. Not 25. What do we want to do? We want this down to 50 billion. That's 2 to 1. No, we don't want it down to 50 billion. We want it down to... Oh, what the heck. Let's get our calculator out. 147 divided by 4. 36 billion. All right. So we need to give them another 15. Man. Alright, that's more like it. Now, management-wise, -2, 0, -2, and 10. Alright, now we need to deal with Microsoft and Dell, which were both picked up by the bank in bankruptcies. So here's Microsoft. Owes a whole lot of money. And that's just ridiculous. But it's typical of companies coming out of bankruptcy. Now, if I buy this from the bank, I'm going to pay that amount, but the bank gets the money, so that's fine, because we've got a lot of loans that we're going to buy. It'll kind of skew our tax basis cost, but oh well, you know. So let me buy that from the bank. And then contribute Computer Associates to it. let's see how much money we need to send them. Alright, so 50 billion divided by 4 is 12.5. So we need to give them 20 billion. Alright, now let's see if we need to do anything management-wise. We need to stop growing negative. And we need to up our R&D a little bit. We're already very capable, so we don't need to make it that big. Alright, so dividend is already 0, right? Yep. Okay, R&D 6. Growth rate 10. And we'll grow some more later. Now we got to go to Dell. Dell, where's his market share? It's a minor factor. Okay, let's go look at the industry. Here it is, 1.6%. Alright, where is computer on our plan? Computer right there. So it's coming up in the next group. So we'll deal with it then. Alright, so who's up next? Next is defense. No, we just did defense. So computer is up next. Alright. Okay. Alright, so let's look at computer. Alright, so Toshiba, Hansen, Sun Microsystems, ATI Technology. Boy, there's a lot of them. Alright, let's add this up. So 2%, 3.5%, 4.3, 5, 5.6, 5.9, 6.1, 6.3, so 6.3% of the industry, which is not good because the growth rate is low and the returns are low. Question is, can we get up to here? We can buy Lenovo too. That would be 13. Alright, I'm going to buy all of these and merge them. And I'll be right back. Alright, so let's look at where we are. We've got 1, 2, 3, 4, 5, 6, 7. Alright, and we've only spent like 300 billion so far. So let's see if there's any stocks that we need to deal with here. Cadence Design, he's in software, so we need to contribute him to Microsoft as well. So let's buy him from the bank. Give him to Microsoft. And now let's liquidate him. Alright, so next up is to buy all the loans for these 5 industries. So we're going to fast forward through that. we bought the second set of loans, and our loan portfolio now is up to 2.9 trillion. And before I start buying stocks, I want to try to short crude oil again and see if it'll let us do that. So let's see. Nope, still in the middle of the crisis, so it won't let me. Alright, so I've looked at the time here, and it looks like it took us 20 minutes to do that first group of 5 stocks. So I need to do more buying and less talking. So the next up on the list is Auto Asia. The only one here that looks like it's worth buying is Mazda, but we're going to inherit Nissan, Daewoo Motors, and Kia Motors when they go bankrupt. So I'm going to buy Mazda and then optimize its management. We're going to do R&D of 6, growth rate of -6, and we're going to eliminate the dividend. Then I'll look at what I need to contribute to it and put its debt ratio at 3-to-1. So I'm going to fast forward now. Auto Asia was supposed to go under an insurance company, so we need to go take care of that real quick. I chose Swiss Reinsurance because it was reasonably priced. It didn't have any stocks of its own yet, and didn't have very much in the way of debt. So I bought Swiss Reinsurance. I changed its R&D to 5% to increase its management rating from reasonably competent to very capable. I changed its growth rate to -1% because we don't need it to have insurance reserves. And then I contributed Mazda to it. So next up is... what's next up? Let's go over here. Semiconductor, and it's a negative deal. So we got to be able to get at least a 25% market share in that industry. All right, so let's go to semiconductor. So we need to be able to get at least 25%, so it's going to depend on whether or not these that are controlled are fully owned or if we can get control of them. That one we can't. This one we can buy for 8% of the market. What about this one? Okay, NEC we can get. Lucky Gold Star. We can get control of that one. And while this one's a little bit overpriced, we can get him too. So call that 30% of the market. Alright, so I'm going to go ahead and do that and then deal with the management and debt issues, and then I'll be back. So we're going to fast forward from here. So we bought 4 semiconductor companies. We've consolidated them all under ST Microelectronics. We've got his debt down to a 3-to-1 ratio. We modified his management to have 0 dividend, negative 10% growth rate, and 4% on the R&D, which is cutting into our profit, but we want to make sure that we keep decent management. Right now, he's reasonably competent. So with everybody growing negative, hopefully the industry will start to turn around, and if we happen to get to very capable, we'll get above 0 a lot faster. Now we're also going to inherit some of these that are going bankrupt. If any of them have assets left over, we're going to inherit those too, so our market share will go up. Alright, so next up on the list is securities brokers. And actually, let's pick one of these real quick. We're going to start with Goldman Sachs probably. But the bank had a bankruptcy inheritance here. Oops, wrong company. Bank. Ames Department Stores. Alright, so we need to merge those two together. So if Costco has money to do it or credit to do it, and it does, we're going to just have it buy Ames and liquidate it. Alright, now let's go back to securities brokers. Securities brokers. Alright, so starting with Goldman Sachs and working our way down, I'm just going to go ahead and buy as many as are affordable and that I can control. And this one is gray, so we don't have to get a certain market share. So we're going to fast forward now while I do that. Okay, we bought Goldman Sachs and Charles Schwab. We merged them into one company. We have some commodities that we inherited that we're going to look at later. I've reduced their debt down to a 3-to-1 ratio, and there's really not much more available in here except for DTAB, which is Deutsche Alex Brown, but he's trading kind of high, so I'm going to leave him alone since he's only 1%. Alright, so next up is electronics, which is the last one of my investments that I'm going to have. Alright, so let's go to electronics. Alright, and a lot of these are owned too, so 1, 2, 3, and let's see what's electronics look like. It's gray, so we don't have to have a specific market share. Though these returns are kind of low. So starting here, I'm going to start working down, see what I come up with. I'll fast forward now and come back when I'm done. taken over the securities brokers industry. We merged a whole bunch of companies here into Nippon. Or excuse me, electronics industry. And we're the industry leader. It was already at -6, which is fine because we want to slim this industry down a little bit. 6% is above everyone else, so I left that alone and I just eliminated the dividend. Our debt has been reduced to 3-to-1 ratio, and we're scheduled to lose money, but that should go up next quarter. And let's just check our interest rate swaps and terminate those. And we need to do this on the rest of them too, the rest of the companies that we bought so far. So I'm going to do this, and then we're going to move to the next industry, which is going to go under the insurance company. Alright, so the next one is pharmaceuticals. And I actually have this one scheduled to go under the other insurance company, so we need to buy another insurance company also. Alright, so I'm going to do that and then I'll come back. Alright, I bought Hartford Insurance Group for the same reasons that I bought Swiss Reinsurance. It didn't have any existing stocks in its portfolio. I eliminated its debt. I've adjusted its growth to -1 because we don't need insurance anymore, and I've increased its premiums, or its advertising, to 5% because it's currently mediocre and we need to raise that up. Alright, so now we're going to go and buy pharmaceuticals and contribute it to Hartford. Alright, so boy, looks like they're all trading pretty high. Let's take a look at GlaxoSmithKline. Alright, that one I'm going to buy, and I'll look and see if there's any others I want to merge it with, and I'll come back after I've done all the buying. GlaxoSmithKline was the only one that we ended up buying. He is the market leader, though. He's somewhat mediocre, so we upped his R&D. We changed his growth rate to 5 to match the industry growth. We eliminated his dividend. So the only thing left to do now is to contribute him to Hartford. And then we're going to have to take a break from our shopping spree so that we can deal with the issues of day-to-day life here. Okay, first of all, Lukoil has found itself the target of asbestos claims. Right here. So the only way to get around that is to create a new company and siphon off all the assets from Lukoil. And that way the new company can use the assets to generate an income, and the drain on Lukoil won't be as great. It'll generate tax loss carryovers that we can contribute to the bank to reduce its tax liability. Alright, so I'm going to create a new company in integrated oil, and I'm going to start it with the minimum so that my startup costs aren't that great. And that's fine. Saudi Arabia is fine. Alright, now Lukoil has how much in assets? $500 million, right? Or $500 billion. So we need to contribute $630 billion to this new company. And now have it buy the assets from Lukoil. And it's not going to be new assets. Okay, from Lukoil, and I'm going to buy all but that 517. Okay, so he's got almost no cash, a little bit of a loan, and we need to stock split him. Okay, and we're going to set his management the same as Lukoil, which is 4 and 8. Okay. Now, we're going to have Lukoil pay off its loan and then do an extraordinary dividend. And we want it to do, let's see how much cash he has. We want him to do it for the full amount then. Because he has 490 billion. So we're going to do the full amount. And actually, I should have contributed him to the bank first. Okay, and now let's have him do the extraordinary dividend for the remaining amount. Oh, it won't let him. Okay, well, I guess we're just going to have to live with that then. Because he's going to have tax loss carryovers. This asbestos thing, it goes on for a while. I guess we'll go ahead and get rid of his interest rate swaps while we're here. Now the bank got another stock in a liquidation, or a bankruptcy, Kia Motors. So we need to have Mazda buy it. And Mazda won an antitrust suit against Toyota. What's the price on Kia? 134. Let's have it buy the rest. And now merge. Okay, and Hyundai Motors was cashed out. All right, now let's buy back our bonds. Alright, and let's see if there's anybody else that's ripe for sale. Nope. Just this guy, but he's only 0.1%, so we won't worry about that. And Oh, let's go cancel his swaps. Alright, now STI still has Dell. I thought we got rid of Dell. Lenovo is the big one, and Dell, I guess we never actually dealt with it. Okay, I'm going to buy... Who owns Lenovo? That's me, right? Yeah. Alright, I'm going to buy Dell from the bank. Contribute it to Lenovo and then liquidate it. Alright, let's see. Now Lenovo needs more cash. So we got to bring him down to 11 billion. So we need to give him 9. Alright. And we need to change this stuff. He needs to have 0 dividend. Growth of -2. And R&D of 6. Okay. Alright, now let's get back on our buying spree. We've just finished pharmaceuticals. So next up is to buy all the loans for this group. Alright, so I'm going to do that now, and I'll come back when all that's done. Our bank loan portfolio is now up to 3.2 trillion. So only another 300 billion did we add there. And you notice there's a widening gap between my cash and the bank's cash. And this also includes like 600 billion from Nippon, which, looking at this total for the stock and subsidiary corps, its price must be getting up there. Yeah, it's close to 2,000 now. So I also, before I started buying loans, I went ahead, I noticed that the spot crude had dropped, so I went ahead and shorted it. I didn't do that for any of the companies, just me. And I notice now that we're up above an hour long in runtime for this video, so I think I'm going to split this into two parts. And if you want to watch the rest of the shopping spree, you can watch part 2 of episode 11. And when we come back on, let's see, this one will come out on the 9th, and I'll put part 2 out on the 10th. And so then on the 13th, episode 12 will come out, 13th of March. And I'll have our spreadsheet updated, ownership structure. I'll update all of these numbers and the allocations for each, and I'll actually going to add some more information out here to the right about the various stocks, so that we don't have to calculate everything as we go. Alright, so I'm going to call this a part 1 of episode 11. Come back tomorrow for part 2, and until then, you guys have a good one.